Yesterday was indeed the wild ride, and if you look at the futures right now, we would have made up pretty much everything. The problem with that is that we were down 20 ticks at 4 o'clock, and Europe was down badly, and everything's kind of come back except for the fundamentals. The numbers for literally every company other than Boeing were not good. And when you have one company making up for all the others, I don't know how much staying power we have. Look, we're oversold. We can bounce. I just feel there'll be a lot of people who want to get out the opening because there were so many numbers last night and this morning that were really subpar.
Yeah, we got revenue misses from UPS, Hilton, Texan, Illinois Tool. So we're keeping our eye on the number of companies that have not been able to sustain that top line.
Yeah, that Texan number that came after the close yesterday, Carl, and I know Jim is on top of this, I'm sure, and I think we're going to talk about it in a bit, but it was bad, and a lot of people wondering what it's all about, and it's going to pressure the chip sector, isn't it, Jim?
Yeah, well, you know what? I really found the call very unsatisfying because repeatedly they were asked, okay, why are things weak? What is weak in the industrial economy? What is weak with devices? What is weak with gadgets? And all they would say is, hey, listen, man, we said it's weak. And so they would come back and say, well, why is it weak? So, well, the facts are weak. And it was very unsatisfying. It was the kind of thing that made me say, thank heavens they have an $18 billion buyback. Because sold to you, Texas Instruments, if you're not going to tell us what went wrong. At least ST Micro last night blamed China. ST Micro's down a whole lot. No one's paying any attention to it. Hello? That's more important than Boeing in a lot of ways because they, too, if you put ST Micro in with Texas Instruments, you got a pastiche throwing Illinois Tool Works of Mosaic, which says there's genuine weakness, Fed. But, I think the companies are, a lot of them has to do with tariffs. So the president may want to blame the Fed. But what does the president want to do? Have the Fed make up for what he's doing? It doesn't seem to work that way.
Yeah, he didn't seem to really want to even admit that there are significant tariffs out there and that it may be screwing up supply chains and or raising the price for consumers, something Greg Hayes spoke to very prominently on yesterday's call with UTX, saying eventually the consumer is going to pay. Jim, as only Hayes can do, going way beyond typically what is probably PR advisors and counsel want him to say, but he's a straight talker, as we know.
Greg Hayes is the guy that put this whole idea that the president might want economic regime change in my head. You got to go back to that October 4th Pence speech, where Pence is basically talking about religious freedom in China and the need for that government to start reacting, or let's find basically another government. That was the speech that I think, along with the Fed saying, hey, man, things are better than ever, has made it so that we're really kind of unrealistic in what the companies are saying. I think the president, the days when he can talk the market up are no longer upon us. And I know that he wants a higher market. Hey, terrific, I want a higher market. But maybe that's where my intersection with him kind of ends.
Jim, all that said, we did get 8.5% peak to trough on the S&P in this drawdown. We're down 12 of 14 days. You got your VIX 25. The percentage of names at a 20-day low is getting smaller. So haven't reset a lot here?
Yes, and that's why I felt that the Caterpillar call was so upsetting. I mean, Caterpillar basically confirmed, look, we're going to do the number. Meantime, the stock went down 50 points. All I'm saying, you know what, Carl, I wanted a down opening today. For heaven's sake, you get a down opening, and then you get a kind of a test, and then boom, you can fly up. Now we got to deal with people who want to sell at the opening. We finish them, and then we can go higher. I just don't like up openings after big down days because what that does is everybody who bought when it was down 500 gets to blow out at the top. But you know what? We are oversold. I think that the market's come down too far. I just wish the fundamentals were better, or I wish that the Fed recognized that the fundamentals have weakened, or I wish that the president would shut up.